This market is not the right time for a lot of people to purchase a home. Now, I'm in lending, and you think that I'm going to tell you, you should buy a house today and everybody should buy a home. And the truth is, that is not the case. There are a lot of people who shouldn't be buying a home today. And here's what's going on. We have interest rates that have hit the highest that we've seen in a really long time. Affordability is a major problem. And I'm talking to people every single day who are stretching themselves to try and purchase a home. And it's gonna break because these people have a significant amount of debt. They have not done a good job of saving. They have not done a good job of figuring out what their spending plan is going to be. And they've spent the last 3 years spending more than they're earning, racking up a significant amount of debt. And now you think, oh, no big deal. I can go ahead and purchase a home and I'll be able to afford a higher monthly payment because the bank says I can. That is a recipe for disaster. I do not want people buying a home simply because John says I can. I don't care what I say you can afford. I don't know what you spend every single day on the things that you are doing in life. I don't know what you spend on kids' sports, on eating out, on travel. There's lots of things that you say, oh, I can just stop doing that. You can, but will you? Will you stop doing that? I don't think you will. I'm not saying that in a negative way. I'm not saying that to be challenging and saying, prove me wrong. I'm just being factual. I think most people won't. And so you have to figure out, am I that person? Am I trying to push myself to buy a home right now and I'm going to fail? Now, the market's not going to fail you. You're going to fail you. The market really doesn't fail people if you have the game plan of keeping a home for around 3 to 5 years. There hasn't been a real time, even in 2008 when the market crashed. People who bought a home back then, by 5 years later, they were back at a decent spot. And by 7 or 8 years later, they were significantly above what they bought the house for. I don't think we're headed back into 2008, but we're headed into higher interest rates for a longer period of time. And so you have to decide, when do I want to become a homeowner? More importantly, do I ever want to be a homeowner? If you don't think you want to be a homeowner, there's nothing wrong with being a renter. But if you say, I do want to be a homeowner, I just want to wait until things are cheaper. They're not going to get cheaper. Think back 2 years. You had people who were buying homes in 2021 that were paying $50,000, $100,000 above the list price and above what the appraiser said the house was worth. And you've got people that had to write checks for that difference, had to write a check for $50,000 or $100,000 on top of their down payment, on top of their closing costs, because there was so much competition to buy these homes. And so people are saying, John, I'm going to wait until interest rates go down. Well, if you're a person who says, John, I absolutely want to be a homeowner, and you're saying, I want to wait until interest rates come down, I am confident house prices are going to go up because we have not seen house prices go down when interest rates went up. A year ago, when interest rates were pushing 5.5%, maybe pushing 6% in September and October of last year, we were tickling almost 7%. Through the end of October. It wasn't until November 9th of 2022, the rates fell from around 7 to around 5.75, and they stayed down in the high 5s to low 6s until January and February. So we had a couple of months of lower interest rates. But people were saying a year ago, in October of 2022, don't buy a home because you're going to be regretting it a year from now. You're going to see lower house prices and you're going to see lower interest rates because inflation is going to come down. I was one of those people that thought we were going to see lower interest rates because inflation did come down. But there are other factors that kept interest rates going up. And I'll talk about those in a minute. But the bottom line is, people a year ago said, don't buy a home, it's a bad time to buy. Guess what? Here we are a year later. Rates are even higher. And house prices are actually up. Nationally, house prices are up about 5% over the last 12 months. Who'd have thunk? We were literally at 6.75% a year ago. We're now at 7.75%, and prices are 5% higher across the nation. What does that mean? It means when interest rates come down, house prices are going to go up even more. If you are someone who does not have a lot of money for a down payment, now is the time to buy a home, provided you actually can change your spending and dedicate more money towards your house payments. You have to think long term. You have to think about, hey, maybe I should decrease or stop putting money into my 401k. Maybe I should change some of my other habits. Maybe I should stop I should not go golfing for the next couple of years and sacrifice something that I love to do for something that's going to give me a huge long-term benefit. Because guess what? 2 years ago, you could not buy a house using down payment assistance because the seller said, look, I don't think you can cover, if you're using down payment assistance, you have no money to cover the appraisal shortage that happened a lot. Why did it happen? It happened because we were bidding so much over what the last house had sold for that the appraiser said, well, this is what it's worth because that's what the last person bought one for. But prices were going up so quickly that this is actually what it sold for, and you had to cover the difference. You couldn't use down payment assistance a year or 2 or 3 ago. Well, a year ago you kind of could, but 2 years ago you could not. So now you have to say, if I am someone who has not saved up a significant amount of money for a down payment, guess what? You're going to have a higher monthly payment today than if you had a big down payment. But you don't have that choice. Your choice is have a larger monthly payment because you don't have a down payment, but be a homeowner and build equity, get a tax write-off, pay down your mortgage every single month, putting more equity into your pocket, or stay a renter. You don't have the choice of winning the lottery and saying, hey, I'm gonna cross my fingers and hope that I win a small lottery and can pay a down payment, or better yet, win a big lottery and write a check to purchase the home. That's not realistic. So why are we in this position that we're in right now? So first of all, here's a bit of a history and kind of what's happening leading up to this. A year ago, interest rates started climbing beginning of 2022 because the Fed was combating inflation. Inflation is no longer the problem that it was. Inflation's back down. I mean, we were up at 9% inflation. In other words, whatever the cost of all of the goods and services across our entire country went up by 9% from what those costs were a year before. The Federal Reserve wants 2% inflation per year, not 9%. We're back down to under 3%. Next week, we're going to get another report and see where we're at for September. But in September, we got the August number and we were below 3% inflation. Much, much closer to where the Fed wants us to be. Here's the problem. The Fed's looking at 3 other things. They're looking at the strength of the economy overall. That includes the stock market, that includes consumer spending, that includes gross domestic product. They're looking at the strength of the consumer, meaning what is consumer sentiment? How are people out buying goods and services? They feel good about the economy and where things are at. And the third thing that they're looking at is the jobs market. This morning, we got a super strong jobs report. What does a strong jobs report mean? It means a lot of jobs were created, more people became employed, okay? Why did that happen? Well, I heard one analyst this morning talk about it, and it kind of makes sense. And he goes, look, people had a bunch of stimulus money that they had from 2020, 2021, and they put a bunch of that in the bank because they couldn't spend it. And then they spent 2022 and early 2023 spending that money, and now they have a bunch of credit card debts. And now, because they kept spending, even when that money ran out, they started using credit cards, and now they've become in debt. They have to pay back that debt. So people are saying, you know what, I need to go find a job. I need to go find a second job. I need to do whatever I have to do to survive. That's what's happening right now because wages are not going up. So we saw a huge number of people being employed or adding to the workforce, but their pay didn't go up. Now, the logic behind that says that's because so many people are looking for work right now because they need extra income that the employers don't need to pay them more to get them to want to work. The fact is they're in so much debt, they need to work. So this is really, really important to understand. You should not be buying a home if you cannot figure out how to get your spending under control, because that's short-term going to create major havoc in your life. But if you are in a situation where you've been searching for a home for 3 years, you've been wanting to buy a home for the last 3 years, and you haven't bought yet, I don't know if you really want to. I have so many clients who've been looking for homes for the last 3 years, and they didn't buy in 2020 because, well, COVID, and who knows what's going to happen, and the economy and all that. And they didn't buy in 2021 because, well, prices are going up, and it's so competitive that, you know, I have to buy a home waiving my appraisal and my inspection and my loan contingency, and I'm not willing to take that risk. Then they didn't buy in 2022 because, well, interest rates are going up and house prices are going to fall. And now they're not buying in 2023 because, well, I can't afford it. Like the payment's too high. And I'm saying, look, for some of these people, their debt to income ratio is actually pretty low. They just spend money on so many other things, and that's fine. But that's the category of person that just should stop trying to be a homeowner. And there's no shame there. The fact is, it's not going to get easier to become a homeowner down the road. Right now is the easiest time to become a homeowner because guess what? Rates in the last week went up. We're tickling, if not over 8%. A week ago, we were at 7.5%, maybe 7.25%. This was a very, very bad week for interest rates. And I think we're going to see that trend continue through October. And so we're going to see sellers that are going to have to get more creative in getting buyers to willing to buy their home. Why? Because you've got somebody that got pre-approved back in August when rates were at 7, and now rates are at 8. And that buyer says, I'm sorry, I'm out. I can't qualify or I won't buy because rates have shot up so much. And the market is hitting a seasonal slowdown. So we've got a double whammy right now where the market is slowing down simply because of the seasons, because people buy in the spring and people buy in the summer. They don't buy as much heading into the winter. They don't buy as much during the holidays. So we've got a slowdown in the number of buyers wanting to buy and a whole bunch of buyers that finally a month ago said, okay, fine, I'm willing to do this. I understand it's 7.25. I'm okay with that. That's just where it is. And bam, rates go up to 8%. Those buyers are backing out. Those buyers are saying, I need to buy down my interest rate. Seller, you need to give me more credits. I'm hearing more and more stories. I have a couple myself of buyers writing offers and deciding, you know what? I'm withdrawing my offer. Interest rates have just gone too high. I had one buyer that withdrew their offer because rates went from 7.25 to 7.5. Just a minor difference, but it was enough of a difference for them. For them, it was enough of a difference. Now that seller, who had already had their home on the market for 60 days, they've got to lower their price even more to find a potential buyer. So this is a great time to buy a home if you truly, truly want to be a homeowner. If you're pretending, sit it out. Don't waste your time. Don't waste your realtor's time. It's not going to get easier to purchase a home. But if you want help, if you're serious about looking at your options, give me a call. I'll sit down with you. We'll have a consultation. We'll discuss what your options are, and I'll help you get across the finish line. We've got some amazing assistance programs out there. I'm getting people into a house for very little money. I helped somebody a month ago buy a $600,000 house and put only $2,000 out of pocket. I've got a client right now buying a $350,000 home. They're putting $500 out of pocket. There are options to help you get into a home, and you say, John, I want to wait. I want to put more money into savings to save for a down payment. Take that monthly amount that you were going to put into savings, add it to what you're comfortable spending, because you're already going to have to write a check. The difference is you're writing a check for rent, plus all of your expenses, plus the money you're trying to put into savings. Take that total number. That's your new cap on your house payment, because you're essentially paying extra to save towards your down payment while you're owning the home. And you're buying in a market where everybody else is scared. Everybody else is sitting on the sidelines, and it gives you an opportunity because we are going to see the housing market go up. We're going to see prices continue to rise, and when interest rates come down, prices are going to take off because there aren't enough homes on the market. You heard me talk about that a lot in prior videos. The fact of the matter is the only thing we don't know is when. We don't know how high rates are going to go until they turn around, and we don't know when they're going to come down. But I do know that it's a cycle. And the Fed's made it clear we're at the end of that cycle. We're not at the end. We're at the peak of that cycle. The question is how long is left? And the Fed has said this week, loud and clear, we are going to be higher longer. Rates are going to be higher for a longer period of time than anybody expected. So use that to your advantage if you're in the segment of people that should be buying a house today. Thanks for listening. Hope you have a wonderful weekend, and we'll talk to you soon. Bye-bye.